I'm Tony Johnson, and I'll be your host today. We're coming to you live from the Caterpillar Financial Services Division located in Nashville, Tennessee. I'd like to welcome, looks like we've got a broad range of people online joining our webinar today. I'd like to welcome our miners and our customers, our dealers, our Caterpillar employees. So you have some suppliers and even some students online. So welcome to our webinar today. We're watching the logins here. It looks like Canada, US, Mexico, Brazil, Russia, and Australia. So thanks for giving us your time today and joining us. We're going to do a little something different with today's webinar. We've been talking a lot about our products and applications and services, but we're going to talk money today, and we're in the exact right place here in Nashville, Tennessee to do that at Caterpillar Financial Services. Got a group of experts with us today that are going to answer some questions and talk about the financial offerings that Caterpillar has. And we're also going to introduce to you solutions, and in particular job site solutions, and how they can help in your mining operation. Let's go ahead and meet our staff. Eric?
Yeah, my name is Eric Haldeman. I'm the Executive Director for Sales of Mining Finance in Latin America. I focus primarily on everything south of the U.S.
Okay.
And I'm Chris Patterson. I'm the Executive Director of the Project Finance Group. I cover all of the Americas.
Okay, welcome.
And I'm David Barrich. I'm the North American Sales Manager for Job Site Solutions.
Great. So we're going to hit really three topics today. We're going to talk about pure equipment financing. Chris is going to talk to us about project financing, where it goes beyond just the equipment and maybe looks at your entire project. And then David's going to be our expert and talk to us about solutions, and in particular what job site solutions can do. We've conducted our safety briefing here in the studio in Nashville, and we hope that you have done your safety review wherever you're following us from today. Now, just a couple of quick insights about the interface that you have. In the upper left-hand corner, you'll see links that you can contact any of the speakers here. You can either connect with them via LinkedIn, or you can click on the envelope button and you can drop them an email direct. We would suggest that throughout this program that you do utilize the interface and click around. We're going to go about 45 minutes today. So if you can stay with us the whole time, great. If not, no problem. We realize people are busy. You will get a recording of this webinar in your email box within a day of the end of this. At the bottom left-hand corner, you'll see a resources section. That's a place where there's a lot of links to topics that we're going to talk about today. And then to the right-hand side, our interface is uniquely designed to take your questions as we go through this. We are monitoring those offline. They'll be fed to me on a monitor here. So if you have questions for any of our panelists throughout this, feel free to do that. All right, so let's jump into it. Let's talk about, we're here in Nashville, and we're talking about Caterpillar Financial Services. What is Caterpillar Financial Services? Give us some background and why in Nashville.
Well, first of all, welcome to Nashville. Glad to have you here. Cap Financial was formed in 1981, almost 36 years ago now. And it was formed to provide financing to CAT's customers so that we can facilitate the purchase of CAT equipment by our customers, obviously working through our dealers. We have a balance sheet of roughly $34 billion in assets. We have operations in over 40 countries and roughly 1,800 employees. And our mandate is to be a secured lender, financing in various modalities, which we'll talk about. The purchase or acquisition, it doesn't necessarily have to be a purchase, but the purchase or acquisition of Caterpillar equipment.
Right, so you are headquartered here in Nashville, but you have a broad distribution of reps and Caterpillar Finance reps throughout the regions, correct?
Right, we have, like I said, 40 countries, and in my particular group, we focus on major accounts. So we have a system where we have global representation. We have a global account manager, and then we have regional account managers. And those regional account managers are in country. I have a team of 7 people, for example, throughout Latin America. And we focus on the multinational mining companies. Now, there are many industries supported by Cap Financial. We support forestry. We have a Progress Rail division that sells locomotives. We finance locomotives. We finance the technology that's sold on our equipment. And of course, generators. There's a group that finances all of the energy projects that utilize Caterpillar generators. So Cap Financial as a whole supports the entire product line of Cat Inc.
Right, and then just recently, kind of a mining group evolved, right, Chris, where you were part of that. And how long has the mining Pacific Group been around?
2007.
Okay, so we're going on 10 years of that. I remember when it first came up, it was kind of a big deal because the business was really booming at that time, and having a mining group in the financial area was really important to us.
Right. Just in the mining group, we've got about 55 employees.
55. Okay, great. So you talked about your customers. I mean, what's kind of a typical, who comes to see you? What type of customer? What are they looking for?
Well, to answer that, I'll describe our structure a little bit. Here we're focused primarily on the mining industry, and in our mining finance group, we're divided geographically. So we have a group that handles the Americas, which is primarily Chris and I and another colleague of ours. And we have a group that handles Asia Pacific, Europe, Middle East, and Africa. And within each of those groups, we have structured finance, which handles the project financing, and we have the major accounts, which handles all the multinationals, the mining contractors, companies that have multiple mining properties in different jurisdictions throughout the world. The type of customers that we handle are generally, like I said, the multinationals, mining customers, but we also handle regional mining customers that, for example, may have a large outsized presence in a single country with a single property, but who are big Caterpillar customers who have large fleets and have more demands in terms of their financing needs.
Right. So talk to us about what are some of the offers? When we say I can finance a mining equipment fleet, what are some of the offerings that we have?
Wide spectrum of financing mechanisms, ranging from a straightforward loan with a promissory note to an operating lease with a structured operating lease with a grace period or a balloon payment or something like that. So finance lease structured also, receivable purchases, financing of rebuilds, financing of technology packages where hardware and software is included. So really a wide range of financing products, not to mention what Chris does on the project financing side, which is in addition to all of that.
Right. So if you're looking at you have your own local bank, you have a lot of lenders out there offering money. Why Cat Finance? Why would somebody come to you, or why do they come to you?
Well, it's interesting. The local banks provide a wide range of services too. They provide cash management, treasury, foreign exchange, lots of different letters of credit services, lots of different services that we don't provide because we're not a bank. What we provide is a very specialized, in-depth knowledge of Caterpillar product that we translate into a financing solution that really meets the needs of the customers. Our specialty is to sit down with the customer, understand their business, understand what their needs are, what the decision factors are, so that we can craft a solution that truly meets their needs. And the difference is, whereas a bank may move in and out of the mining space, we're here. We're here to stay. We're here to support Cat Inc. We're here to support our sales. So we're not going anywhere.
You stay very close with the used equipment market, so you understand that with Caterpillar equipment, which would impact the residuals on what it was operating. Right.
That's exactly right. We have a group that focuses primarily on the secondary market, understanding what the residual values are. We have several groups within Cat Financial who are active in selling the used equipment when it comes off of lease. And so we're able to offer the value, the intrinsic value of the machine. We understand it better and can build that into the financing solution.
So how does the process work of I need equipment, I need it financed? Do they come directly to you? Do they go through the Cat dealer? Walk us through kind of an example of a typical equipment financing deal.
Right. Well, generally it's on the customer side, the procurement team and sometimes the finance team together, deciding that they need a particular piece of equipment or a fleet of equipment. And they contact the dealer. That's the primary first step. Contact the local Cat dealer, find out from them what's available, what the process is, try to get a quote. And then the dealer will engage in a discussion with the customer to understand what the need is. And part of that need is often financing. How are you going to pay for it? That has to be part of the discussion. And when that happens, they often turn to Cat Financial and contact us. The dealer does. Right. So it's not really so much the customer that's picking up the phone and calling Cat Financial. Right. They're going through the dealer. The dealer contacts us. We then go in a joint meeting, sit down with the customer, with the procurement and the finance team, and find out what they need to put a solution on the table.
Yeah, it's much different. We were talking in discussion. It's a little bit different when you go buy an automobile. You go talk to the finance guy. He presses a couple buttons, and it comes back and says yes. There's not a whole lot of collaboration, right? You know, they're looking at your credit score and your social security number, but in this case, there's a lot of collaboration and understanding of the true needs.
That's true. You don't often get a sales manager at a car dealership saying, "Hey, what do you need?"
Yeah, that's right. Yeah, absolutely.
So in this case, that's what we want to hear from the customer. We want to hear, what is it that you need? What is it that really is going to drive you to make the decision to purchase CAT equipment?
Right. Well, Eric, we'll come back. There's some trends that are happening there. We'll talk about that in a minute. Let's transition project financing. So what is the difference between project financing and equipment financing? And that's your area of expertise.
I appreciate it, Tony. First, let's talk what project financing is. Okay, and project financing, a loose definition is it's where a company is looking for a debt solution to finance the capital needs of, in this case, a mining project, where the owner of the mine wants to segregate that opportunity and that debt from its other assets. And project financing itself, rather than focusing on how to finance specific assets of specific Caterpillar pieces of equipment, we look at financing all the CapEx needs of that mine. So it can include the Caterpillar equipment. And in fact, for us to be involved, it needs to include Caterpillar equipment. But it could include the power plants, the processing equipment, the mills, working capital. It's all the components of a total expense for a mine that can be covered off by debt.
Right. What's a typical size customer that comes and talks about project financing? Is it the super large multinational companies, or is it smaller operations, or is it everything? What's kind of where's the key customer opportunities there?
Well, to some level, some of Eric's customers, the large international, multinational companies, may look at project financing, but there are other vehicles available to them based on their market cap and their historical operations and financials. The space I tend to focus in is what's called the junior market. And these are the small mid-cap customers that generally have one asset they're looking to develop somewhere in the world. This group typically has mines where the total capital expenditure is somewhere between $300 million to maybe $2 billion.
So that's equipment and everything.
That's equipment and everything. That's correct.
Okay.
And within that number, if it's a surface mine, about 10 to 15% of that total capex is the potential opportunity for Caterpillar surface gear sales.
Okay.
And to touch on the point that Chris made about multinationals also doing project finance, it's possible that they may want to ring fence a project.
Sure.
Meaning that they wouldn't want the lenders to be able to access the cash flow from the parent company. So that does happen occasionally, and when that happens, he and I collaborate.
Right. So, Chris, talk to us about the project finance team. We talked about it starts with the dealer, and there's collaboration, but it's that same collaboration and then some. So, walk us through how does a typical? I know you're in the heat of an opportunity trying to help out a customer right now. Talk to us about how, when does that start? What's the process? How long does it take?
Sure. For a junior starting up a brand new mine, the gestation of the location of the claim and development of that property into a project that is capable of being financed could be anywhere from a 2 to 20 year period of time. Gestation periods are very long for this process because it includes permitting and raising equity and proving out the resource and ultimately the reserves of the project. Typically, we get involved with a customer at what's called the preliminary economic analysis stage, where the mine has roughly a 50% likelihood of being built under certain economic conditions. And at that stage, we are talking to them, as Eric talked about, collaborating with the dealerships and with the product groups to understand what potential this mine has and what role can Caterpillar as an enterprise play. As a company goes through its analysis process with more drilling and sampling, it moves to what's called a pre-feasibility stage and ultimately what's called a bankable feasibility level. And that's where you're moving from drill samples to resources to proven and probable reserve. And once you get to that point, that is when that customer is looking seriously at the equity components of its needs, the debt financing instruments, what could be equipment, could be project financing, could be high yield bonds or private equity money. That process, again, from the financing perspective, is generally a 2 to 3 year window.
Right, and it's not just the Caterpillar surface mining equipment. It can be rail or electrical power.
It can be everything.
The whole
and
thing.
that's the beauty of project financing. We're not limited to just financing the equipment. We can put extra dollars in towards the project above and beyond the value of the Caterpillar equipment.
Yeah, and you bring lots of partners involved with that too. It may not just be Cat Finance yourself.
Well, you're absolutely correct. Let's take a simple $1 billion mining capex. Typical market standards are about 40% of that is equity, so that's $600 million need to raise on debt. That's an awful lot for any one institution to take on. So typically in a situation like that, you'll find 5 or 6 financial institutions coming together to form a club, and together that group of lenders provides that facility.
Right. Now, what other services beyond insurance? Is that something that comes into play?
Extended plan protection, yes. There are insurance services available to protect the equipment. We can finance non-CAT, non-competitive equipment,
right,
which is often part of a package where a customer is buying a fleet of equipment and needs a trailer or something that CAT doesn't make. And so we can finance that as well.
Well, just the global nature of your footprint and the ability to handle laws and jurisdictions across in various parts of the world. I'm sure it's not the same everywhere you go, right?
No, that's very true. And that's what makes our job kind of interesting, because we work in so many different countries. We have a different legal presence in many of the countries. In some countries, we have a full-fledged bank. In other countries, we have just a rep office and everything in between. So that's where customization and understanding the local market comes into play. You have to understand the market in which the customer is operating in order to understand what kind of financing you can provide. Yeah. In some countries, we can provide only operating leases. In other countries, we can provide both operating and finance leases. In some countries, the accounting standards are such that there's really no difference between the two. So it's imperative that you understand each jurisdiction and how they operate.
Well, and even further than that, there's some countries where we can't take security interest in the equipment.
Right.
So direct equipment financing doesn't work.
Right.
Hence, project financing can come in, and that's one of the unique things about Caterpillar Finance. We can provide both sides of that equation. Right. Most other captive companies can focus on equipment financing.
What's the difference in terms between maybe equipment type financing and project financing? You call it tenor, right?
Mine are better. But
yeah. As far as the length of period of financing.
Yeah, and it really depends on customer credit quality and the location, the commodities that are involved, the strength of the customer. But their products, if we go equipment financing and use, we've got export credit agency a team, and we can utilize some of those facilities, and they can be 8, 10, 14-year terms. Typical equipment financing tends to be in that 4 to 7 year range. Yeah. Project financing is unique in that there's usually an interest-only period during the construction of a mine. So a construction period could take 18 to 30 months, where all the customer is obligated to pay is the interest portion of what they borrow. And then they go into a term out, generally over another 3 to 5 year period of time.
Right. We've got a question that's come in that what has financing done, or what has Caterpillar Financial done to kind of help through the last few years of kind of the tough times, the financial issues and a lot of downsizing in mining operations and cutbacks? What are some examples of what Cat Finance has done to help those customers?
We've signed forbearance agreements. We've allowed skipped payments. We've amended agreements to change the maturity of a loan or lease. So there are lots of flexibility in our approach to financing, because we understand that we're in the game for the long term, and so is our customer.
Well, you are. I mean, just the fact that we've got $34 billion you mentioned. It's always interesting to me that whenever Caterpillar announces their quarterly or annual results, there's Caterpillar and there's Cat Finance, and that's just a testament to the huge investment and how important it is to our business.
Well, there was another example. There was a relatively large mine in the United States that had a wall collapse on a pit, and they needed immediate need of 18 D10s, D11s, and some trucks to move out the waste and the ore and redo their mine. And so we had to act very quickly to help source the equipment and provide the financing for that customer.
And sometimes there are natural disasters that require
Right.
some assistance as well, either affecting the operation of the mine or creating opportunities for us to put equipment on the ground and working.
Like the oil sands flare last year. That's right, same thing.
Well, great. Well, learned a lot about finance there. I would remind you that you can continue to ask your questions on the right-hand side of your interface. You can type those in. We'll monitor those, and they're feeding us to us here. So we talked a lot about equipment finance and project finance, and let's talk about solutions. And so, it's Caterpillar Financial Services. So we have products, and we have parts, and we have support, and we have services, but the solution space is something that's really taken heels in the last really 4 or 5 years, and kind of the definition of a solution is hard to define sometimes. So, David, what is a solution, and what is Job Site Solutions' role in providing those?
Yeah, absolutely. Starting with your first question, what is a solution? A solution is much like what both Chris and Eric talked about from a financing standpoint, but at Job Site Solutions, we extend that further to include other capabilities that we have within Caterpillar and our dealers. And those additional services may be around maintenance and repair, execution services, equipment management, and productivity services. So what we do at Job Site Solutions is support our dealers in collaborating with our customers to bring a fully capable solution to solve a business problem that's important to our customers. So we tend to be outcome-based in that we start by listening with to our customers, much like Eric talked about, to identify the problems and then structure the solution, which is, again, a combination of products and services to solve a specific business problem, and bring that all together in one single contract.
You're kind of the best of, where you sit down. You don't really go to meet with a miner or a quarry or an operation with a menu of saying, here, you can choose 1 through 5. You go to them saying, hey, let's look at what's your capabilities, what are our capabilities, and at Caterpillar and our extended partners and our dealers, how can we help do that? How does the process work? So here in the finance side, it still starts with the dealer. If a miner wants to work with you or a quarry wants to work with you, do they come direct or do they work through the dealer?
No, they absolutely work through the dealer. And what the dealer is listening for is signs from the customer that might indicate that they prefer a solutions-based way of doing business as opposed to a traditional transaction. And what the dealer will do then is reach out to us at Job Site Solutions for added commercial support to not only help identify the specific solution elements that are required to solve that business problem, but look to us to help structure the contract that could bring together the financing and the other services, operational-based services that we can offer to not only provide equipment, provide the financing, but provide operational improvement opportunity.
So often it does involve some kind of financing or off-balance sheet financing, but it doesn't necessarily have to.
Absolutely correct. It could be either way. Oftentimes embedded in our solution is some sort of pay-for-usage type financing that allows the customer added flexibility to pay for the equipment when they're using it and not pay for it when they're not. While that's subject to monthly minimum utilization, it's therefore very important to really work with the customer to understand the operating pattern and set that minimum utilization appropriately. But when that financing is not a relevant solution element for that particular customer, then we don't have to offer that.
So you mentioned things like equipment management and productivity. It's probably a good point. Give us a good example of what was a challenge, what was a solution, and what was the outcome.
Yeah, I'll do that by example. So we recently worked with a surface coal miner producing about 600,000 tons a year, and they were facing an aging fleet, and the impact it was having on their business was they were seeing unpredictable maintenance costs consistently exceeding their monthly budget or plan, coupled with declining availability. So that was the the problem as defined by the customer. And after listening, we were able to partner with the dealer, our local dealer, and perform a site and equipment assessment to develop a specific plan, both in the short term and the long term for their equipment. And as a result of that, we were able to implement condition monitoring to better understand the performance, health performance of the equipment. We were able to implement planning and scheduling and backlog management to ensure the repairs were being done not only on a timely basis, but being done in a way to minimize the impact on mechanical availability. The results of that, or the outcomes we were able to generate, were far more predictable maintenance and repair costs that were able to be sustained below the monthly budget, in addition to double-digit improvement in mechanical availability. So if you look at that, the overall impact to that particular customer at that site was an overall reduction in their cost per ton by lowering the life cycle cost associated with the equipment, in addition to increasing mechanical availability and becoming more productive.
Yeah, especially leveraging everything that's available. You know, some of the larger operations might have those in-depth maintenance and planning processes where they do that, but some of the smaller operations, or even some of the quarry operations, can't do that. So who's responsible for what in a solution? How's the payments going? How do they work with Cat Finance and then work with you and then work with the dealer, or how does that happen?
Yeah, really, it's a one-stop shop facilitated by Job Site Solutions. So each of the stakeholders, the customer, Caterpillar, including Cat Financial, as well as the dealer, have specific roles and responsibility in executing on one of our solutions. But Job Site Solutions is the coordinator that drives the collaboration between all stakeholders to ensure we're aligned to drive the contractual result. So the way that it culminates with the customer is one single payment for equipment, financing, and services, if it's comprehensive in nature, that comes through Job Site Solution, and then the payments are facilitated to the various providers. So the key point in how we execute is collaboration and alignment across those key stakeholders.
Right. So we had a question that's come in, I think, and I'll tie this in, was technology is playing a huge role in your ability to, you mentioned the example, talk to us. You guys have been on the forefront of working with some of the technology offerings and advancing that into a solution. Yeah,
absolutely. And, the onboard technology is not new. It's been available on our equipment for some time. But what we've been able to do within Job Site Solutions, partnering with many of our capability providers across Caterpillar and our dealer, is start to extract that data from the equipment and present it back in the form of production reporting,
Right.
whether it be real time or after shift. And what that is allowing our customers to do is to gain further insight into their operations so they can identify opportunities for improvement and drive actions that will either lower cost or increase productivity. So technology has been a significant lever in our productivity services offering, or elements of our solutions, to go not only beyond the iron, but beyond the financing into the operations to help drive that improvement. Again, working collaboratively with the dealers and our customer.
Well, measurement's absolutely essential.
Absolutely.
In these, because it's part of your agreement that you're going to improve something so much, so you have to be able to measure it. So speaking of technology, in both equipment and project financing, technology is included, correct? So whether it's a MineStar offering or autonomy or fleet health detect terrain, it's included.
Included in what we can finance? Yes.
Yes.
Yes, it is. We can finance the hardware, the software license. We can finance the training that's done up front to learn how to use the technology. Mm-hmm. So it's best if that all comes straight from the factory, already included on the machines. We can also do it as an add-on, but it makes it a little bit more difficult.
Yeah, just what you're financing and what's the asset that you have, right? But in project financing, it's a little bit easier.
Well, it's much easier, and in fact, one of the benefits that other institutions find in bringing Cat Finance as one of the club members is the information and the technology and the expertise within the enterprise, because they understand that what Caterpillar brings to the table in a project helps the customer and helps with the availability and the uptime and production. Keeps the cost down, and that just ensures repayment. which is what lenders look for, right?
Repayment's always an important part of financing, isn't it? At all the time. So
oftentimes what we find with the customers who are looking at project financing, it being a greenfield and a startup, they might not have the shop facilities and the technical expertise of the skilled trades to maintain the equipment. So oftentimes they might be looking for a service provider to do that. And this is an instance where we can develop a standalone services offering and make it available through Chris's financing as side-by-side agreements that go hand in hand, again, to solve the unique challenges that a startup or a greenfield mine might face.
Yeah, we see that as one of the big opportunities for Cat Finance and Job Site Solutions.
Right. A question, and I guess, Eric, to you is how big, how much can you finance, and how far out can the terms go? What's kind of realistic there?
Well, the sweet spot is in the $5 to $50 million range, but we've done much larger deals. We've done deals in the $100 to $200 million range. It really depends on the customer's needs. If we have a multinational that wants to finance, I don't know, a single machine for $500,000, and they're a long-term customer of ours, we can do that. We'll certainly be glad to do that. But again, the sweet spot is usually in the $5 to $50, $60, $70 million range.
Okay. What about project financing?
Same thing. Probably the smallest ticket we've written is $10 million, and we've gone up several $100 million in total financing opportunities.
Right, and you mentioned the difference between kind of typical length of the financing of equipment versus that. We're probably about 5 or 6 minutes done from the end of our webinar. I would ask you to take this time and utilize your interface. If you would like to ask any questions direct, you can email or connect via LinkedIn in the upper left-hand corner with any of our speakers. Also in the bottom left-hand corner, there's a resources section. There is a particular link that goes to Job Site Solutions, so if you'd like to learn out more about that, you can go online and learn more there. Another question that's come in, why would a customer choose JSS?
Yeah, so if a customer is looking to drive lower equipment lifecycle costs while improving productivity, and have made the choice to outsource what once may have been a core competency, that's around equipment management in particular, Job Site Solutions would be a good opportunity. What the customers can do then, again, is partner not only with Job Site Solutions, but have the added support of our dealers and Cat Financial to provide that one-stop shop, which ultimately can be a turnkey fleet management solution. So, those would be key attributes. The third attribute would be around technology. As you mentioned earlier, being able to measure the operation allows you to improve it. So if a customer is looking to better utilize the onboard technology that they have in place currently, couple that with site and office-based software to provide a full picture of the operations, Job Site Solutions would be a good place to start to do that.
Now, just I guess in closing, we talked about, so what are some of the trends that you're starting to see in the equipment or project or Job Site Solutions? Eric, what are some of the trends that you've seen in the last few years?
Well, certainly the technology is probably the primary trend. There's more and more use of technology, more demands for financing it. I would say also that it's certainly with the downturn in the mining industry, companies are faced with CapEx decisions, and they're utilizing their fleets longer. They're keeping the machines running for a longer time. And so financing rebuilds has become an interesting topic of discussion as well. More efficiencies from their fleet, so greater sales of parts and components and financing of those as well.
Yeah, there's a lot of parked fleets that are coming to life again, and you may need that big capital injection to help with the rebuilds and parts, and that's something that you can help in.
Exactly. Good.
What about from the project standpoint?
Well, one of the biggest things is probably the re-entry of private equity firms and some high-yield bond funds that have come into the marketplace. The good news is that my team can work with, or our team can work with those private equity firms and still contribute and support a customer. The advantages of that is generally less covenants, less handcuffs on a customer, but they pay a price for that, much higher cost of funds. But there's a benefit to that. There's always trade-offs. The other one, and I think we've kind of all talked about it, is the importance of collaboration. Really spending the time to get to know a customer. It's not just about writing the big check and doing it quickly. It's, understanding the mine plan, the operations, the management's experience, commodity outlook. Where can we help a customer? And more than just writing a check or just sending some reports. It's that all intact, and that's become more and more critical. And it's a value add that the Caterpillar dealer network and the distribution network that Caterpillar brings to the table. Those are components or attributes of future success for a mining company.
That's true. The whole trend, at Mine Expo in just a few months ago, the collaborative side of it was, how do we get more? How do we save money? And the technology requires a lot of collaboration. It isn't, I want this black box and it goes to work, because there's a lot of variations. The solution space is very collaborative, and so is the finance. So the days of just, I want to place an order for a dozer and it shows up, it feels like that whole collaboration of how can we leverage the best capabilities of everybody. David, in the solution space, what's kind of the trends?
On a macro level, believe it or not, we're seeing some of the effects of the sharing economy come into play with our customers, not only in mining but in other industries. And that is, our customers are seeking higher asset utilization and a higher return on these capital-intensive assets. So they're looking for solutions that are going to help them achieve that. And we talked about some of the examples where we've been able to do that. In addition, we see risk management or risk sharing coming into play, especially in the mining space. If you look at the impact the downturn has had on the industry over the last 5 years, that was followed by an historic buildup. Many of our customers purchased capital-intensive assets only to find them parked, as you had mentioned earlier.
Right.
So looking for some risk sharing in acquiring these assets. And then finally, we do see trends in outsourcing, what I mentioned earlier, what many customers had viewed as core competencies in the past, the ability to manage equipment, the ability to maintain and repair the equipment, seems to be shifting to others who are better positioned to do that, and even turning to turnkey fleet management providers to do that. And we think with the extended offering we have through Caterpillar, Cat Financial, our dealers, we are well positioned to help our customers shift their buying behaviors more in line with those trends.
Well, very good, guys. We're coming up at the end of our time here. We thanks for your time, gentlemen. Thanks for hosting us here in Nashville. It's been a great experience. I would remind you that you'll be getting a recording of this webinar within a day, so we'd like for you to share that with your peers. Also, too, you can go to cat.com/miningwebinars. All of our webinars are recorded and are available for you there. We've talked trucks. We've had 3 ways to optimize your mine site. We launched a new rotary drill, the MD6250, just recently. So, and there's a ton of we've mentioned technology. There's a ton of these webinars. So very good resource for you. So go to cat.com/miningwebinars. Also, too, our next webinar is scheduled for June 27th. We're going to be back in the studio in Peoria, and we are going to talk technology. We're going to have several of our experts there. Technology is really a hot topic now. I know I work right next to the technology group, and they're really busy right now. A lot of people looking at autonomy, our command for hauling, our command for dozing offerings, and then better ways to manage their fleet. So look forward to that. It'll be one of our better webinars of the year for sure. I would also, too, before you leave, the bottom left-hand corner in the resources section, you'll see a sign-up link. I would suggest if you haven't signed up to receive future communications from us in your email box, it'd be a great time to do that. You'll get notifications of upcoming webinars like this one. You'll get notifications of recorded webinars, and you'll also get product and service information on a regular basis. So with that, we thank you for joining us at the Caterpillar Mining Webinar Series, and we look forward to seeing you next time.